Do you know the profit improvement potential of your business? Not your revenue, not your backlog, the actual gap between what you're making and what you should be making. This is something I typically walk through with CFO level clients only, and I'm still surprised at the reaction it gets every single time. This is the Contractor Success Forum and the inaugural episode of my new YouTube channel, Profit First Construction. I'm Wade Carpenter with Carpenter Company CPAs alongside Stephen Brownlet, McDaniel Whitley, Bonding and Insurance, and today is going to be a little different. I've only given Stephen the topic and have never shown him this math. This is some voodoo simple math that you may have never thought about before, but I hope it changes the way you think about your business. So I know that's a tall order. Stephen, initial thoughts on what we're doing, because I know I've sort of left you in the dark.
I don't know. Voodoo Mouse sounds wacky. I'm excited and interested to see where we're going today.
Today, I want to walk through a model, and this would be part one of two, because when I showed this, we do have to adapt it for construction, but I think there's a lot of learning in this and thinking about how we can increase the value of our business. So let's just say we had a business that did 3.6 million. They had cost of goods sold at 2.52 million and gross profit of $1,080,000 or 30%. Their overhead was $770,000, and then that left them a profit of $310,000. If you're listening to this, it doesn't matter whether it's 3.6 million or 360,000 or $360. The math is the same. So that's the thing I want you to remember. But if you hang in here, I think you're going to learn something here. Let me set the stage here a little bit. Let's just say this was not a contractor. This is just a company that bought and sold proverbial widgets, whatever it is, that we bought it and then we turned around, marked it up and sold it. One product. Given that for this type of business, and we wanted to increase that bottom line, what would you start with?
I would start by lowering overhead expenses, I guess, first thing. That looks a little high. As far as revenue, I'd start, I don't know. I would look at the revenue as a percent. You're netting out a little under 10%. So I guess in the construction world, that seems pretty good to me. That might be repugnant to some of our listeners, or it might be crazy high.
In this particular case, we start breaking down that $3.6 million. Most people think revenue, this is the only way to, yes, you can cut expenses, whatever it is, but what I want to talk about today is how do we work on this revenue? Let's just say we have a number of customers. We started with 300 customers, okay? And on average, they bought the two items at $500 each. And then they actually bought from us 12 times during the year. So that'd be $12,000 a year. So that 300 customers on average paid $12,000. So they gave us the 3.6
Okay,
million.
so we're on widgets, not construction.
Right. Like I said, I want to get some concepts down here first. Hopefully this math makes sense. So if we were looking to improve the bottom line and we knew that was the deal, I mean, what could we do? Most people think of adding customers, right?
Well, sure.
How can I get more sales?
That's everyone's logic.
Okay. I mean, if we were selling widgets, what could we do to just add customers?
Lower our prices, spend more money in sales and marketing.
Throw a sale out there. I know this is tough. I'm
Do
gonna let y'all
anything you
hook a little
can
bit.
to make widgets more important and viable product. I think the first most widget manufacturers would do was be cut cost to get new customers.
I know you said, okay, we're going to try to increase profitability, but if we are trying to add customers, and the thing about that is that's something we'll get to is if we lower our price, what happens? We'll come back to that. But if we're just trying to increase the number of customers, you've already said a few things that we could add new customers, but how can we also increase that number? We'll stump you here, right? Let me lift you off the hook a little bit. Everybody thinks, okay, I'm going to add new customers. A study that was done a long time ago said, and again, whatever it is for your business, if you started with 300 customers and on average, maybe a business would add 20% of new customers every year and lose another 20% of the customers, right? Obviously, you could add a couple more customers and that's going to translate to the bottom line. 2% more customers, that increases the value of the business. If we added one new customer, what does that do to our bottom line? Okay. So just 1% of new customers that translates to like a $10,000, almost $11,000 profit.
That sounds pretty
Um,
good. Are you taking into account the cost of acquiring that new customer is already built into overhead?
right. And we're going to get to that too. That's where some of the lessons come into this. The other part of this is if you had number of customers and you're losing 20% a year, could we work on some things like retaining new customers?
Okay.
Yes, everybody thinks let's get new customers, but can we work on reducing the number of ones that leave? So that's another way, even if we're not doing anything there, we pick up the phone and call them, send a newsletter, do something to get that out there. Like we care about our customers. And
It doesn't
so
matter
that
if
would,
all widgets are exactly same. People do business with people they like to do business with, and you can always do something better than your competitor to keep a customer.
right. The point taken in construction, there's some customers that, or maybe you have repeat business. I've had some contractors that go all over the country doing build outs of restaurants or gas stations or whatever it is. The point here is what can we do to increase that bottom line? We can also think about instead of just increasing the number of customers, we could also work on some things that you already mentioned, like reducing the price. But that would also send us the wrong way,
Right.
right? And we're going to come to that because there's a big lesson there to
Okay,
reset
so am I
that right
jumping
there.
around saying that you could also not worry about the customer number as much as just raise the price? And then you risk running off more customers.
Exactly where I'm going with this. But let's just say if we increased our price by 1%, would we lose customers? Maybe not. But that 1% increase in price would translate, in this case, to a $36,000 increase in profit. And that's what I'm wanting our listener to focus on today is okay, what are the things that we can do to drive up the value of our business, right? And increase our profitability, whether it's 1% or 2%. And again, we're going to get to the lesson where I hear all the time I can't raise my prices because I'm going to lose all my customers or I'll never get a new job. Hang with us for a little bit. Let's just say on average, we sold two of them at a
Mhm.
time, right? So we could work on that as well, the quantity we sell to them. Maybe we have some bundled offer where we just add one widget as a sale. That would be huge numbers here, $1 million. Just thinking about can we bundle this? Can we get a bigger sale? Can we upsell? Things like that.
Yeah, I'm just in my mind trying to picture what a bundled widget looks like, but go ahead.
We just got to get a bigger
Okay.
bag or something to put them
That's
in. Now, like I said, if they bought, I don't know what this is. Let's just say it's a coffee of the month club or whatever. They came to us and they bought 12 times a year at that. We started working on, okay, if we sent out a mailer and did a sale or something like that. And we're not talking about cutting prices. We got out there and we actually got them to increase the number of times they bought from us every year. What does that do to our bottom line? In this scenario, it would put another $90,000 on the bottom line.
okay.
Okay. So hopefully you're seeing some of the different levers we're talking about pulling here for a widgets company. And again, we're going to come back to the contractor thing as well as we need to talk about the price because there's a lot of good things to say here. Let's talk about our cost of goods sold. Now, this is oversimplification, but for our revenue, we sold it at $500 and it costs us $350 a piece. We're on average selling two of them, so it costs us $7,700 per $1,000 sale that we had above. And again, the transaction frequency. Can we work on reducing the price, whether it's working with our suppliers and cutting a deal, buying in bulk, or whatever it is, right? If we're reducing our price by 1%, that would increase our profitability in this scenario by 62,000 or 20%, no matter what we do. Okay. I want to keep this high level on this part. You already mentioned, okay, your overhead. We can cut our expenses. And what can we cut to increase our profitability? The relationship up here, if we add $1 of revenue, that doesn't translate to $1 of profitability,
Right.
right? So if we are working on reducing our overhead, maybe we go cut out some subscriptions, move to a less expensive rent. We can work on
Mhm.
that. But if we reduce our overhead by 1%, that's $7,700. That's a direct increase in the
Right.
bottom line. Now, I want to sort of put all this together. But before I do, we've had a few episodes in the last few weeks about mergers and acquisition and what happens, those kind of things. If you know anything on business valuation, there's 7 or 8 common ways you would value a business. And a lot of times when you're doing a valuation analyst would mix some of these ways together to come up with a value. It depends on the industry and all that stuff. I'm not trying to get in the weeds here, but my point is one of the ways you value a business is by a multiple of net income, right?
Right.
If we have a business value multiple of 3 times and we can do some things to work on the value of our business, like systematizing our business and making it so that somebody can have repeatable process. Maybe if we get that multiple up to 4 and we're starting with that, we can increase the value of our business by
Right.
$310,000. Now, what gets interesting is if we open all this back up, one of the things that you told me was if I raise my prices, I'm going to lose all my clients, right?
It's
What's
possible. I
that?
guess it just depends on what your competitors are doing.
Would you really lose a lot of clients if we raised our price by
I
1%?
don't think so. I think everybody kind of
I don't.
expects a little bit of cost of living type of adjustment. You look at your homeowner's policy, don't they automatically increase the replacement cost value of your home by an arbitrary percent? So, yeah, I mean, it's just a
Arbitrary to me.
reality, isn't it? So, we're
Now,
talking about revenue. Is this going way toward our perception of our cost of revenue, or we trying to look at this holistically and include the overhead expense? Like, for example, I'm going to get rid of as many employees as I can and overwork the ones I have. And by the way, they can work in the dark and they don't need heating and air conditioning. I mean, I love the chart, Wade. It definitely is a great way of showing how every little thing affects your bottom line.
right. I mean, there's a few lessons I want to hit here today. And in the next episode, we're going to bring this back to contractors. But if we don't want to bet our business on a 10% price increase, could we maybe find 1% here, 1% here,
Mhm.
1% there? And so that's where if I put 1% increase in each of these categories, maybe we're not going drastic on our pricing. We work on getting 1% new customers or reducing our defections by 1%. In that case, it translates to $425,000 of profit, $115,000 profit here, additional, but our business value also would be increased by $358,000,
Right.
right? If we're trying to improve the profitability of our business and finding that potential, what we're looking at is we don't want to bet the farm on some things. I've seen some contractors go all in on, say, a niche or whatever, and then things don't always pan out. But if we're trying to get to another level and you've been frustrated by that, maybe we can work on some of these little things and they can translate into bigger things.
Okay. I
Okay.
love that concept. And also, from the perspective of the widget owner, that old expression, pigs get fat and hogs get slaughtered. How much are you going to stress the system and what will it bear? What will your organization put up with? I guess we'll talk about that too in the next podcast.
We will, but there was one big lesson I want to put here that I'm just going to reset all this because initially went in there started talking about
Right.
pricing. What you said first was, okay, we're going to reduce our prices to get
Mhm.
more customers, right? And if we reduced our price by 10%, how many new customers would we need to get to make the same level of profit?
That's a great point. What's the answer?
There's some math here that I really
Okay.
want to show, but I want you to take a stab at it. We've got a 30% gross margin. Remember that if we raise our price, our cost hasn't changed per widget,
Right.
right? Our 70% gross margin is going to
Right.
drop if we reduce our price by 10%. So, given that we got 300 customers, I want you to take a wild stab at how many customers we would have to gain to actually make the same level of profitability. We'll put it in here in a second here.
I
Wild
mean,
stab.
first thing right off the bat is just looking at you're going to decrease it 20%. So let's just use that number of increasing the number of customers by 20%. What would that do?
So let's just say we decreased our price by 10%. That's all I'm
Okay.
looking for. If we didn't gain any customers, we would be losing $49,000 as opposed to increase it. That's a
Right.
$360,000 swing. So we do need to pick up customers. If we're looking at how to get back to where we were, and this is a big lesson for contractors, whether it's widgets or whatever, we think about, okay, we're going to make it up on volume. For the sake of time, if you want me to put the number in there, I mean, we would actually have to, any guess?
I would say you'd have to increase the customers by 15% because maybe there's some hidden costs for acquiring new customers.
Even if everything
Okay.
stayed the same, then you would actually have to increase the number of customers by 50%. We're going from 300 to 450 customers, double our customers to make the exact same level of
Wow.
profitability at 30% gross margin. 50%.
Why is that so high, Wade?
Remember, we're only getting 30% profitability. And if we're reducing our price, let me reset that. So if we are reducing our price by 10%, our gross margin is going to drop to 22% as opposed to 30% because our costs for our widgets haven't changed.
Correct. Oh, I see what you're saying. I see how net income's dropped by plugging that number in. You
So
want
now,
to increase the customers and make the same or more net income by decreasing prices and then creeping them back up later.
the point is everybody thinks I'm going to get more customers by decreasing my price, right? We're going to relate this in part 2 to the contractors a little more, but the math here, you see why it's the wrong way. But let's just take the opposite approach, okay? So how many customers could we afford to actually lose if we raised our price by 10%? Everybody said we're going to lose everybody, right?
Plug it in. What's the answer? You got me sitting on the edge of my seat here.
You don't want to take a stab at it this
So
time.
you're raising your price 10%. And how many customers can you afford to lose? I certainly
Yep,
wouldn't think it'd be 150 like it would cost to raise it. I would say you could afford to lose 30 customers.
30 customers. Okay. So if we add 10% and we did lose some customers, then we could actually afford to lose a quarter of our customer, 25%. I'll show you. So we could actually be working with fewer people. So we went from 300 customers to 225. You see, we're making the same level of profit.
That's incredible. I'm fantasizing that the 25 that you lose are all jerks, people you don't like doing business with.
Right. And I've seen contractors getting this, like, we got to continue rolling through and pushing revenue through and taking it at whatever price we can get it. And it becomes a spiral like this. This is the main teaching moment I wanted to get to in this level. And again, in episode 2, I want to take this more to a contractor level and relate this where you can see it. But I think that's a powerful lesson. There's 2 powerful
I
lessons.
do too.
I
What
would
are we
say.
calling the second podcast coming right up?
We're going to be adapting the profit improvement potential to construction. What did we learn here? We see the value of discounting, or we see the value of increasing, and you see how that sort of like spirals.
Yes.
The other thing I would say is if we're looking at little incremental adjustments in our business, can we make those incremental adjustments? And in this case, we could increase the value of our business by $350,000 by making these small adjustments. So with that said, any takeaways? I know we're talking about widgets, but the idea is I hope there, and again, this is stupid, simple math, is it
It is.
not?
And we've always talked in our podcast about the importance of not assuming that just increasing your revenues is going to solve all your problems on your bottom line. We talked about that for years. You have to always be analyzing not only what the marketplace does, not what other people are doing, but what you're going to do. What you're going to do
Right.
to firm up your market share and continue to do everything you're doing to a point where you can raise your prices 10% when you have to. And you can strategically look at this. It's not a emotional decision or a decision made after you're already in trouble. It's pricing it right from the beginning.
There's a lot of lessons other than just the prices are part of the decision. Again, if our contractors are out there listening to this, I hope you got some aha moments. Again, stupid, simple math, but maybe something you've never seen before.
Okay.
And I hope you'll come back for the next one because we are going to get into some more I hate to call it stupid, simple math, but a lot of times people have never thought about it from these dimensions. I've really reserved this for my top level CFO clients, and I never really put this out to the world. But this is some powerful stuff, and I'm looking for contractors here starting in 2026 when we're recording this. I hope they take some lessons to heart, and if you have some questions, reach out. We'd love some comments on this. We'd love for you to like, share, subscribe to both channels, not just the Contractor Success Forum and Profit First Construction. We do this every single week. We appreciate you, and we will see you on the next show. Thanks.